Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Monday, the 23rd of February. I'm Caroline Hepke in London.
And I'm Stephen Carroll in Brussels. Coming up today, the United States tells trading partners they must honour their tariff agreements as Trump's trade agenda risks unravelling.
The EU calls for clarity on White House policy following the Supreme Court's ruling as the UK risks being the biggest loser.
Plus, not such an asset, why a German pension fund's spectacular implosion is putting a €300 billion industry under scrutiny.
Let's start with a roundup of our top stories.
Countries are beginning to reassess their US trade deals after President Trump's signature tariffs were struck down. Following the Supreme Court's decision on Friday, Trump introduced a new 10% levy, which he then increased to 15% on Saturday. That rate is lower than or equivalent to the rate that many nations had negotiated with the White House. But US Trade Representative Jemison Greer told CBS's Face the Nation that the deals the Trump administration had signed remain in place.
The deals were not premised on whether or not the emergency tariff litigation would rise or fall. They weren't premised on that. So it's totally normal for these countries to, talk to each other, have meetings internally to determine this. But rest assured, I've been speaking to these folks as well, and I've been telling them for a year whether this case, whether we won or lost, we were going to have tariffs. The president's policy was going to continue. That's why they signed these deals, even while the litigation was pending.
Jemison Greer says the US will be standing by the trade deals it signed, and they expect their partners to stand by them as well.
Now, there are already questions over President Trump's new 15% global tariff. The new levy replaces those that the US Supreme Court struck down on Friday. The statute allows US presidents to impose duties for up to 150 days in situations of fundamental international payments problems. Here is the US Treasury Secretary Scott Bessent speaking to CNN's State of the Union.
The president, the administration remains undeterred in reshoring American factories and getting rid of these massive trade imbalances. That's the big story here, is that we are immediately going to go to Section 122 tariffs, that the revenue for the U.S. Treasury for 2026, the projections are unchanged.
Scott Bessent there referring to Section 122 of the 1974 Trade Act, which provides for tariffs under specific circumstances, including large and serious balance of payments deficits. But a host of economists and former US trade officials have told Bloomberg that there is no evidence that the US is unable to pay its bills or meet its obligations to international investors.
Friction between the United States and its trading partners over the renewed tariff uncertainty is already spilling into public view. The chair of the European Parliament's Trade Committee, Bernd Lange, says he will now propose the freezing of the ratification of the EU tariff deal with the US until the Trump administration clarifies its policy. Meanwhile, the European Central Bank President Christine Lagarde says the latest tariff moves risk upsetting the previously negotiated equilibrium.
It's critically important that all people in the trade, both outside of the United States but also in the United States, have clarity about the future of the relationships. Because it's a bit like driving. You want to know the rules of the road before you get in the car. It's the same with trade.
Christine Lagarde there speaking to CBS's Face the Nation as European Union lawmakers get set to hold an emergency meeting later today on the matter. In New Delhi, officials cited similar reasons to the US as the reason for India postponing talks in the US this week on finalising an interim trade deal. And ahead of the US president's trip to China, Beijing now says it is conducting a comprehensive assessment of the implications of the Supreme Court ruling, according to a Ministry of Commerce spokesperson.
Well, after spending months talking up its special status, Britain is at risk of becoming the biggest loser from the US Supreme Court's ruling. The UK had agreed a tariff rate of 10%, but if the US imposes 15% tariffs on all countries, that will mean a high increase. Bloomberg's James Wilcock has more.
Ask anyone in the Labour Party what are Keir Starmer's biggest successes as Prime Minister, and they're likely to name the UK-US trade deal. The US is Britain's largest single trading partner, and Starmer had won praise for managing to secure a tariff rate lower than the EU. At the time, Bloomberg Economics estimated the marginally lower rate would improve the UK's GDP by 0.1%. But having to cozy up to the US president has also cost the Prime Minister dearly in political capital. If Britain's favourable deal goes up in smoke, Westminster may wonder what it has received from its months trying to placate the White House. In London, James Woolcock, Bloomberg Radio.
Oil prices have fallen as traders consider the odds of a nuclear deal between the United States and Iran. Brent crude dipped towards $71 a barrel, with more negotiations planned for Thursday. On Friday of last week, President Trump said he was considering limited military strikes on Iran. Speaking on CBS's Face the Nation, Iran's Foreign Minister Abbas Araghchi said he believes in a non-violent situation.
If they want to find a resolution for Iran's peaceful nuclear program, the only way is diplomacy. And we have proved this in the past, and I believe that still there is a good chance to have a diplomatic solution which is based on a win-win game, and a solution is at our reach.
Iran's Abbas Araghchi there speaking to CBS News. The International Atomic Energy Agency's board is scheduled to meet in Vienna next week, where diplomats are expected to consider a new resolution censuring Iran for its nuclear program and could refer it to the United Nations Security Council for further action.
Hungary is planning to block new EU sanctions on Russia and key loans to Ukraine until oil deliveries to Hungary restart. Speaking at the weekend, Hungarian President Viktor Orbán said that the 90 billion euros in loans to Ukraine previously agreed by the EU won't materialise until dispatches resume. Speaking to Bloomberg last month, the Foreign Minister Peter Szijjártó expressed his dissatisfaction with the EU's Ukraine policy.
It is very dangerous what European Union is doing regarding the war. It's very dangerous that they are sending and spending the money of the European people on the war. We are not ready to send any Eurocent of the Hungarian people to Ukraine to operate their country and to bring more weapons.
That was Hungary's Peter Szijjártó speaking to Bloomberg there in January. A vote on the EU's 20th sanctions package against Russia is expected today. The Druzhba pipeline system in question, which moves Russian crude to Hungary and Slovakia through Ukraine, was damaged in a Russian attack on the 27th of January, leading to a halt in shipments. So those are our top stories for you this morning. Let's look at the markets this hour. Tariff uncertainty has dampened appetite for US assets. So the dollar at the moment is weaker 0.2%. This also after we saw the S&P 500 gaining on Friday 0.7%. Stock futures are deeply in the red, so down at the moment 0.7 this hour. Yields on 10-year treasuries will begin at 4.08. No cash treasuries trading in Asia hours because Japan is closed for a holiday. But some relief in Asia because maybe this new US global tariff is lower than some of the previous trade deals struck. And so you've seen the Hang Seng jump 2.4% this morning. MSCI Asia Pacific Index up 0.7. Oil prices are down 1%. Those are the markets.
In a moment, what next for Donald Trump's tariffs and the trade deals with the EU and others, plus how troubles at a German pension fund are raising big questions about the whole country's retirement system. But another story that we've been reading this morning: do clubbers go out to dance now or just to film it on their phones instead? This is not how I spent my weekend, although by the sounds of it, I don't think I'd really enjoy it either. Tiffany App's been writing about how in nightclubs, the shows are getting bigger, but audiences are changing too. She writes that clubbing increasingly resembles concerts, so forward-facing, phone-lit and strangely static. And she's been writing about what this means for the whole economy, the whole nightlife economy really, and how nightclubs are essentially ramping up the show, the screens, the light show, etc. That's leading some to overextend themselves, causing problems in the sector as well. But also kind of bigger conversations. DJs are saying they're not getting longer sets anymore. It's all about shorter, sharper. It's about creating shareable moments over danceable experiences.
I love this story about the business of dance music, but I was really sad to hear that rave culture has kind of turned into a spectator sport. It's not the kind of wild, euphoric, kind of sweaty dancing.
Caroline.
Well, I was thinking that, but then I did listen to some music over the weekend and I was sitting down. Anyway, I love that story from Tiffany App.
Yeah, we'll bring back dancing. We'll put a link to it in our podcast show notes as well. So what next now for Donald Trump's trade tariffs after Friday's Supreme Court decision? The US president has promised a 15% global tariff in force from tomorrow, while the EU and India are among those trying to seek clarity on their trade deals. We've got our trade czar Brendan Murray with us for more on this morning. Brendan, what do we know now this Monday morning about what the US plans to do in terms of reinstating the tariffs that were struck down on Friday?
Well, what we heard over the weekend from the U.S. Trade Representative Jamieson Greer is that the administration is trying to maintain some continuity with its overall trade policies. That means his office, the USTR, is going to undertake these investigations called 301 investigations, which are essentially industry-specific or country-specific, and taking a look at what the U.S. would consider to be unfair trade practices, investigate those, consult with those countries, and then come up with a justification for tariffs being applied in those cases. So those don't take days; those can take weeks at the very least, and usually many months. And so the administration is saying that this 15% across the board global tariff is the bridge to which they will get to those other kinds of tariffs. And so that is what it can create some uncertainty for businesses or for governments that have these deals. What is going to be the tariff rate that they wind up with after all this is said and done?
Yeah, so the European Commission says that it wants clarity, and the chair of the Trade Committee in Parliament in Europe wants to freeze ratification until that clarity emerges. What does it mean then for the EU and other US trade partners around the world?
Yeah, exactly. The EU is and the UK are still exposed to the car and the aluminum and steel tariffs. Those are done under separate authorities, so those could be raised if the Europeans, thought that they could back out of this deal, the deals that they have with the Trump administration. So the Trump administration is telling trading partners, just relax. Abide by the deal that we've signed, and everything will be fine. But if you're sitting on the receiving end of that, you don't really know that what you're going to wind up with at the end is something that you agreed to in these particular agreements. So it's creating a layer of confusion. There are a lot of other issues that need clarity, including the refunds from tariffs, which are, $170 billion worth of revenue that the governor has collected from American importers. And, that's going to cause a lot of blowback domestically for President Trump, too, if they can't figure out a way to do that in an orderly fashion.
Okay, Brendan, thanks so much for bringing us up to date this Monday morning. That's our trade czar, Brendan Murray. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Now, a German pension fund's loss of half its assets is raising questions about the management and regulation of a key pillar of the country's retirement system. Our European finance reporter Nicholas Comfort joins us now for more on this story. Nicholas, so the fund known as VZB is a pension fund for dentists in Berlin. What exactly happened to it?
They had leadership which thought they could walk on water, as one other investor put it to us. They invested in all kinds of businesses that, first of all, that they weren't probably allowed to invest in. They're supposed to be investing based on very conservative principles in terms of the liquidity and the safety of the investments that they make. But they thought, no, we know better, and they plowed money into a California recycling company, a northern German shrimp farm, and as one investor put it to us, they basically behaved more like a family office than they did a conservative pension fund. And late last year, it was confirmed that the expected size of the losses amount to half the 2.2 billion euros of assets that they have. And so it's the Berlin dentists, they probably will see their pensions reduced by this.
So how have authorities reacted to this?
So the Berlin prosecutors have said on the record that they are looking into this, and they haven't said exactly who they're probing, but it's probable the people who took the investment decisions are relevant actors for the prosecutors. beyond that, we also know that the Berlin ministry that's supposed to oversee them, we have heard from other pension funds that they have become more active, as you would hope and expect after an event like this. But it's also kicked off a debate in Germany about sort of, are these special type of pension funds who are overseen largely by local ministries, does that make sense, this system? Or should they be put under BaFin, the Germany-wide financial markets regulator? That's a political decision, but the regulator itself, BaFin, has said that, we can't help but notice that there are a cluster of losses, of unpleasant losses at this type of fund.
Yeah, it's a huge deal, isn't it? So then, do you think it might lead to bigger change, very briefly?
So I think it's possible, yes. Friedrich Merz, our chancellor here in Germany, is kicking off a wider overhaul of the pension system. It's possible that there'll be some kind of structural change, but also that maybe there'll be, in terms of the supervision of these funds, that they'll see that the system isn't fit for purpose as it stands now.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.